Hi everyone, I'm Colleen, and in this video I'm going to go through the incentives a homeowner is eligible for when they decide to go solar. It's important to be well versed on these incentives as they are one of the primary reasons people go solar in the first place. So to start off with, tax credit and SRECs. So a tax credit reduces the amount of taxes a customer has to pay when they file their taxes. A retiree or somebody who pays minimal in taxes cannot take advantage of this incentive. Those who can take advantage of this incentive can apply the credit in one tax filing, or they can carry it forward into subsequent years. The solar renewable energy tax credit is another major incentive with going solar. SRECs are sold to the utility who's mandated to have a certain portion of its electricity come from renewable sources. And just looking at a solar tax credit specifically, there's two types, the solar investment tax credit and the state tax credit. The solar investment tax credit is a federal tax credit, and it's 30% of the solar system price. And then the state tax credit, it depends on the state how much it is, but for Massachusetts, it's either $1,000 or 10% of the cost of going solar, whichever is best. Now I'm going to calculate how to determine the federal tax credit as well as the tax liability once the tax credit is applied. So assume that a customer has a tax liability of $16,000. They're sold a solar system at $50,000. So the federal tax credit for going solar would be 30% of the system price, which is $15,000. The tax liability for the customer is then reduced by the tax credit amount of $15,000. So $16,000 minus $15,000 gives us $1,000 owing in taxes. Now with the second example, assume the customer has a tax liability of $7,500. They're sold the same system at $50,000, so their federal tax credit remains the same. In terms of the tax liability, we can only apply $7,500 worth of the federal tax credit, because when you deduct it from the tax liability of $7,500, it'll give you $0 owing. So that leftover amount of the tax credit can be applied to the following tax period. And now just a quick overview of SRECs. So SRECs are sold to SREC aggregators, and a customer signs up with an SREC aggregator after their system has been installed. SRECs are paid at either a fixed rate or variable rate, and the payments often happen quarterly. Customers often use their SRECs monies to pay off solar loan payments that are due. So it's very attractive selling feature with selling solar. Now just an example of how to calculate the number of SRECs per year a homeowner can earn. So you have to multiply the system size by a factor of 1.2. So a 10 kilowatt system would give you 12 credits in SRECs per year. And then the annual earnings, assume the SRECs rate is $260 per credit as per Solar System's June pricing. So 260 times 12 credits gives you $3,120 in SREC per year. Other incentives that are worth highlighting with the customer are the utility rebates if they are available, such as the Taunton Municipal Light Plant utility rebate of $4,500. The utility savings that come with net metering is important to highlight, as well as zero interest loans, which are used to finance a part of a solar loan or a solar system price. And that concludes our presentation on understanding tax credits and incentives. Thank you for tuning in, and please be sure to look at our other sales training presentations. Thanks. Bye.